Good morning, everyone. This is Srikant Rajan. Welcome to Stock Market Podcast from mpiinvest.com, the only platform where you learn to invest and trade in the stock market, plan your financial goals, and invest in different financial assets to grow together with a community of knowledgeable investors. If you are not a part of the community yet, visit our website mpiinvest.com to join the community free of cost. Coming to stock markets, last week we saw the biggest fall in Nifty, wherein Nifty has actually come down to its 52-week low. So that's not something looking great, and we are hovering around 15,200 levels. But then if you see, after the big fall on Thursday, the Friday the market did consolidate, and after Indian markets closed on Friday, the US markets actually closed in the green. Well, does that mean the markets are going to be in a positive territory? It was. I would say the SGX Nifty was trading in the positive territory, but things have gone bad again, because we see that SGX Nifty is again indicating a gap down opening today. One way I would say it is good to have a gap down opening, because gap down opening always gives some opportunity for buying in when the investors who had actually shorted the market would book profits when they see a gap down. But then at times, if the being the weekend, the holdings of the investors in the short position may be less, and if that is the case, we might see some more fall. So that's something that we need to watch out for. However, for the day, I feel the Nifty would more of consolidate, and not only consolidate but also it will kind of have a small recovery till by end of day. So that's something that we can expect as of now, because today the US markets are closed. There are no global cues coming in, and it is only tomorrow that we can expect the US markets to open and give some cues to the Indian market. But apart from that, if you look at the news from US, things are looking really bad. In fact, the US factories production also has unexpectedly fallen down in May. In fact, with rising inflations and productivity going down, things are not looking great in US, of course. But in India, the industrial production data which came in last week shows that it has actually improved in India, and inflation is still better in control in India compared to the US. So India, of course, is in a better position, but then as the global sentiment itself is negative, we will continue to be negative for some more time. So it would take a few months probably for India to recover from the negativity. But as of now, I am bearish on the market, and my view being bearish, my trades are also on the similar line. But like I've told you earlier, this is an opportunity for us to enter good stocks and build a beautiful portfolio for our future. So in fact, there was also many comments coming in saying that this is one of the worst bear markets that has ever been seen in the history. But then if that is so, I would say we are all lucky, because this is the best time to get started. So if any of your friends who have never been in the stock market, you should tell them that this is the time you need to actually get into stock market, because this is the time you can start investing and make a beautiful portfolio that can give amazing returns over the years. Now, something again good that we can look at is, in India, the direct tax collection has actually increased compared to the last financial year, right? The last quarter, in fact, if we see the direct tax collection for FY 22-23, as on June 16th, the total tax collected is 3,39,000 crores compared to the same period last year, which was 2,33,000 crores. So this again only builds a confidence in the Indian market, which I have been always talking about. So this is a great news for that, I would say. So direct taxes includes income tax and even the STT. So all these things which actually is collected directly by government, and if this is going high, this directly means that the income in people are really good. So STT is also higher because probably the participation in the stock market has also increased over the period of time. So all this together, a good collection is what I would say is always a positive for a country like India. Apart from that, if you see top brokerages, companies like JP Morgan, CLSA, all of them have started giving positive forecast for Indian stocks. Especially LIC is in radar, because JP Morgan has initiated a buy rating on LIC, and they are forecasting a 6% growth in FY 22-24. So this is something good. In fact, we have been already adding LIC. If you have noticed, we have already added in 2 tranches, and I would be looking forward to add more in the coming days. Of course, I will be sharing that in the community when we do that. Apart from that, CLSA has also maintained an outperform call on the Britannia, as they say it has a healthy cash generation to support the growth needs. In fact, they've set a target price of 3,850. So this could be another stock in our radar, and of course, I will be intimating you when I enter into this. So if you look at the market for today, I would say as of now 15,000 would be a major support to be seen for the market. Any fall further below 15,000 actually can drive market to close to 14,500. But then yes, we've got one more support at 14,800 in between. On the higher side, which I'm not expecting the Nifty to actually cross above 15,300. 15,300 could be a major resistance, and above that we could see 15,500 as a major resistance. And that's exactly how I have planned my trade in the gold club, so that we all make some great profits in this coming week. So looking forward to a great day in the market. Let's make a profitable day. And before we leave, do press the like button if you love the content that we share, and do share this with your friends to help them invest together with us. This is Srikant, Rajan signing off. Let us catch up for more details in the evening market podcast. Goodbye. Have a great day.